Oh, no, yeah. Okay, yeah, let's go ahead and do that. Start streaming. Okay.
That's disgusting. I don't even know what compels somebody to do something like that.
Good morning. Today is July 10, and we are on chapter 15, and we are going to go through Exhibit 8 on page 620, and after that we will do a practice. We will pick a problem from chapter 15, and that will be problem 5 on page 640. Problem 5 on page 640 of the textbook. But for now, we will go ahead and go through Exhibit 8. Okay, so let's start with Exhibit 8 and see if we can explain that. That's a full statement of cash flows. Have with you those handouts that I gave you last time, so you don't have to keep flipping from page to page. Okay. If you remember, we said the statement of cash flow has 3 sections and 1/4. One more section on the bottom for non-cash a schedule of non-cash items. So you look at this Exhibit 8, that it has the operating section, which is the first one, and then you have the investing section, and then the financing, and in the bottom you see a schedule of non-cash. That's the 4th statement. So let's take a look at the operating sections. First, of course, you're going to put the title of the, just like you do with the other statement, we start with the title. So if you notice, the first section is cash flow from operating activities, and we are using the indirect method. Okay, and the indirect method, we start with cash flow from operation, and we have to adjust this net income. If you remember, we said that. So we're going to change this 16,000 from accrual basis to cash basis. So we start with the 16,000, and then we look at the components of the income statement. We said there are items that were originally deducted. We have to add it back, such as depreciation, amortization, depletion. If there is a loss that was originally deducted, we have to add it back. And if there was a gain that was originally added, we have to subtract it. So let's take a look. You take the 16,000. I wonder if I should do that on the board. Do you think I should write like what we do with the, or just go through it and then we do the problem? The problem we'll put it on the board. Yeah.
You put the problem on the board.
Yeah.
This stuff's in the book.
Okay, so 16,000. Take the 16,000. What items? Look at the income statement. What items should we add? What items should we subtract from this, which is Exhibit 4? I think if you look at operating expenses, including depreciation expense, so the depreciation expense, we should add it back. So if you look at this column, so you're starting with the 16,000. These are the additions and subtractions. Okay? So if you notice that the depreciation was how much?
37,000.
Yes, and you see where we got it from?
The operating expenses, including depreciation.
Yes.
Expense and things like
So we have, notice it's positive. It's not between two brackets. All right, look again on the income statement. Do you see anything? I see gains and losses.
Yep.
The gains, it was originally added. See, it was originally positive 12,000. Now we got to subtract it. And I see also loss. The loss of, how much was it? 3,000? It was originally subtracted. Now we have to add it. Do you see anything else in this income statement, in this, that should be added or subtracted? I don't see nothing yet. So those are the only items. Then we're going to go now to the comparative balance sheet, which was Exhibit 5. We're going to look at changes in current assets and changes in current liabilities only. So I think this one I should write the rules here. So let me go back and write the rules. Okay, so you take net income, and then net income, okay. Then once we go to the balance sheet, once we look at changes in current assets and changes in current liabilities. So we subtract, here's the rule, from net income we subtract the increases, write this down, subtract the increases in current assets and we add the decreases in current assets. Notice it's the opposite correlations between net income and the current assets, the opposite. That means you add the decreases, subtract the increases. Okay, so we subtract the increases and then we add the decreases in current assets. All right, and then current liabilities is a mutual correlation. We say add the increases in current liabilities and subtract the decreases. It's a mutual correlation. Subtract the decreases in current liabilities. Okay, so with the current assets, it's an opposite correlation. You add the decreases, subtract the increases. Okay, with current liabilities is a mutual correlation with the net income. You add the increases, subtract the decreases. You got it?
Yes, sir.
All right. So with these rules, let's go back to the exhibit on page 620. The exhibit on page 620, and we through with the income, correct? We looked at the income. Now we come to the current assets and current liabilities. So cash is the one that we don't look at because that's going to be our check figure. That's what we are trying to explain.
That's what we check to make sure our answer is correct.
Yes, sir. So take accounts receivable between 13 and 14, 2013 and 14. Did it increase or decrease?
Decrease.
That means we add. Yeah, by how much?
8,000.
8,000. Notice that's what 1,000 positive. All right, and then we look. Then we have prepaid expenses.
We don't get inventory.
Oh yes, sir. The inventory, did it go up or down?
It went up.
As that means we subtracted. By how much? 34,000. So negative 34,000. And then we go to prepaid expenses. It went up.
Down.
Sorry, it went down. That means we increased. Yeah, we added. By how much? By 4,000. Notice there was a 4,000 increase. positive. All right, then that's all the current assets. Then we go to current liabilities, and we said it's a mutual correlation. So current liabilities, we have accounts payable. Did it go up or down?
It went up.
That means we add by how much? By 7,000. So if you notice, 7,000 is positive. The current accrued liabilities, it went up. So we add by how much? 3,000. And then current assets and current liabilities. So again, number one, we look at the items of the income statement. Number two, we look at changes in current assets and current liabilities. All right, that will give us cash flow from operating activities. So in this case, we adjusted this 16,000 and it became how much? 30,000. Imagine that we had a net income of 16,000 on accrual basis, but when we changed it into cash, that net income became 30,000. See, so you know how the 30,000 came about. So you take the 16,000 plus 37 minus 12 plus 3 plus 8 minus 34 plus 4 plus 7 plus 3 minus 2. Okay, that will give you 30,000. Okay, so operating or cash flow from operating activities is 30,000. Now we come to the second component of statement of cash flows, which is investing activities. Investing activities, like we said last time, it has to do with long-term assets, buying and selling long-term assets. So what happens if we look at the long-term assets, but we should have some kind of explanation. Also, you should have some explanation, like if you go to page 614, notice we have 5 explanations there. You see those 5 explanations? Yes. 5, they purchased investment in the amount of 78,000. That's a long-term investment. So, if you purchase an investment, do you have inflows or outflows?
Right now is
You are purchasing.
Oh, so that's gonna be
Outflows. Yeah, when you purchase, you pay for it, correct? So that's going to be a negative 78,000. That's why you see on the, go back to the exhibit at the same time, exhibit 620. See, you see under the investing activity section, under the investing activity section starting here. So you have a negative $78,000. So go back to number 2, sold for 102,000 investment that cost 90,000. Before we go to the gain or loss, sold for 102. So we have inflows or outflows? Inflows. When you sell, you have inflows. So that's why you see a positive 102,000. Now the question is, the gain, it cost 90,000, but it was sold for 102. So how much was the gain?
12,000.
The gain, 12,000. Notice, where is that gain now? That is, you see it on operating activities. The gain that you see here, 12,000 gain on sale of investment. It shows there, yeah. Okay, number 3. purchased plant assets in the amount of 120,000.
So that's outflow.
Outflows. So see how it's listed? Purchased plant assets, 120,000 as negative. And then the fourth one, sold for $5,000 plant assets that cost 10,000 and that had accumulated depreciation of 2,000. So if I were to find out the gain, first of all, sold for 5,000. That means we have inflows for 5,000. Now, can you tell me how we figure out the gain or loss on this one?
How many, I guess?
How do we figure out the gain and loss on number 4?
Because it said accumulated depreciation of $2,000, so I guess we gotta find out plant assets cost $10,000. See how many years, like.
First, find the book value.
Okay,
The book value is equal to, you remember? Book value is equal to original cost minus,
accumulated
yes sir.
depreciation.
So the original cost here is what?
10,000.
10,000. And so how much is the accumulated depreciation? 2,000. So 10,000 minus 2 is 8,000. But it was sold for?
5,000.
So do we have a gain or loss?
A loss.
A loss of?
3,000.
Now where is that loss showing?
Right
It's
here.
showing here.
Loss of sale.
Yeah. Remember, we add the loss and we subtract the gain because it is not an operating. That's why we have to subtract loss from our sales while it is not an operating thing. So that's why we add the loss and then we subtract the gain. Why do we have to add something to our sales while it is not an operating? So that's why you subtract the gains and you add the losses, yeah, to the operating section, in the operating section, yeah. Okay, so we have here a positive 5,000. Okay, and then number 5, it says issued 100,000 of bonds at face value in a non-cash exchange. Where should that go? The very last section. Okay, so let's see cash flows from investing activity. What's the balance in it?
Investing.
From investing, those 4 things. So we have a negative 78, positive 102, negative 120, positive 5,000. So we end up with?
Negative 91,000.
Yes, sir. So you see how? So that's the second component of the statement of cash flows. Number 1, operating, positive 30,000. Investing, negative 91,000. Now the financing. Now we remember the financing, it has to do with, what does it have to do with the financing? Long-term liabilities and stockholders' equity. Transactions that have to do with long-term liabilities and transactions that have to do with stockholders' equity. Such as if you issue stocks for cash, do you have cash inflows or outflows? Inflows, because we're collecting cash. Yeah. If you pay off dividends, if you are the one who are paying the dividends, outflows. Yeah. So let's see what kind of activities we had in the financing section. So go to page 618. 618. See, there are some financing activities. There are 5 things. You see those? Issued. Number 1, issued 100,000 of bonds at face value in a non-cash exchange. That goes in the bottom section. Doesn't go in the financing. and then repaid 50,000 of bonds at face value at maturity. Is that inflows or outflows? Outflows. So look in the financing section, the last section. You see a negative 50,000.
Repayment of bonds.
Yes, sir. You see that? All right. And then number 3, issued 15,200 shares of $5 par value common stock for 175,000. Is that a positive? Is that inflow or outflows? Inflows. For how much? 170,000. You see the 170,000 on the statement of cash flows?
175,000.
175. You see what it's saying? It was issued for 175, and then paid cash dividends in the amount of 7,000. Outflows. So you see there is a negative 7,000. And lastly, purchased treasury stock for 25,000. Is that inflows or outflows? Outflows for 25,000. Now look at the financing section. What's the total of the financing section?
Positive 93,000.
Positive 93. Okay. Now add the 3 sections. Add the 14 as the third. Add the 30,000.
Negative 91,000 and a positive 93,000.
What do you come up with?
Positive 32,000.
Did you check that out?
Yeah, I did it right here because look, if you take the positive 93,000, take it from the negative 91,000, you left with 2,000.
All right.
Then you add
So,
30,000, 32,000.
Is our work correct or not correct?
It's correct.
How do you know that?
Let's check. Oh well, gotta go to the cash.
Yes, sir. Go to the cash. Did it increase by 30,000? You can look at the sheet they gave you.
32,000.
Huh?
32,000 increase.
Yes, sir. That means our work is
Correct.
correct. Yeah. All right. Is that interesting? Statement of cash flow. But
I
you
feel
see,
like it's necessary though.
Huh?
There's a lot of stuff to do, but it's necessary, sir.
yeah, it's a good statement. Once you get the hang of it, it's a very important statement, really. Now let's practice. Let's go to problem 5.
That is 640.
Page. Yes, 640. All right. So let me go to. Let me write on the board. Problem 5, page 640, and let me make that big. Bold, and increase the font like that. All right. So the first thing is we're going to put the title. What is first before we what's going on here?
Income statement.
Yeah. Now read problem 5 for me.
Young Company's income statement for the year ended December 31st, 2014, and is compared to balance sheet as of December 31st, 2014, and 2013 follow.
So you have an income statement, and then you have a comparative balance sheet, 2013 and 2014. You see that? Mm-hmm. Just like with that exhibit. So first we're going to start with. Let me go to maybe a new page. You think?
Yeah, we gotta find the income statement. We gotta find the net income and net loss to do the comparative.
Okay, let's start a new sheet. Maybe we'll be able, and let's say no space, and time New Roman. Let's use the quality of line. Time New Roman, and then we need the 12 font. All right, so let's go to the center and put the name of the business, which is Young, not Young, small age. Yeah, Young company. Young company, and then we put the statement of cash flows. Statement of cash flows. And then the date, which is for the year ended.
December 31st, 2014.
For the year ended.
Okay, I see the number. I see the number.
Ended, which one did you say?
No, I was looking at it. I was like, it didn't say the statement cash flow, but I see the question one asking for
Yeah.
using preferred
For the year ended December
31st, 2014.
31st, 2014. Okay. Now we start with cash flows from operating activities, and we're going to use the indirect method. The practice that we did earlier, that was indirect method. So we're going to go to cash flow from operating activities. Number one. Cash flows from operating activities. All right, and we, in that regard, we need to adjust that net income from accrual basis to cash basis. So the net income is, how much is it?
$11,000.
Yes, sir. So we're going to say net income. And you know, I should have used Excel is better. You think we should go back to Excel or just stay with this one?
I mean, we can switch back and forth. Like, do our work on Excel and then plug it into like the actual.
It's all right. Let's just, we don't want to keep flipping on. It's too much. All right, it's 11,000. 11,000, correct?
Yes, sir.
So I'm going to put it a little bit far here. 11. Let me put the dollar sign on the first one, and then the rest of them. That means $11,000. All right. Now we're going to go to look at the items that we should increase and decrease in the income statement itself. So what do we have on the income statement? I see we have depreciation of
46,800.
Is that should be positive or negative?
Positive.
Positive, yeah. So I would write depreciation. How much?
46,800.
46,800. And let me put the dollar sign here. Okay. So that's positive. Okay, what else do we have? I see we have a gain of 7,000.
Okay, gain on sale of furniture.
Yes, so that is a negative.
Yep.
Okay, so we have gain on sale of furniture, you said?
Uh-huh.
On sale of
furniture and fixtures.
just on furniture, on sale of furniture. All right, for how much?
7,000 negative.
So that's going to be, I'm going to put it between two brackets. Negative 7,000. Okay. Do you see anything else? Do you see anything else? I don't see. Then we move to balance sheet. Changes in current assets and changes in current liabilities. And let me remind you again of these rules. For current assets, it's an opposite correlation. You add the decreases and subtract the increases. For current liabilities, mutual correlation. You add the increases and subtract the decreases. Yeah. Okay. So let's go back and continue. Okay. Let's start with account receivable. Did it go up or down between 2013 to 14?
Down.
It went down. Oh yeah, I was looking at the cash.
You can't do that.
It went down by how much?
114.
So that's decrease.
That's the cash.
Oh, that's the cash? Oh, my fault, that's the cash.
See, I did the same mistake like you. Decrease in accounts receivable. Account receivable by how much?
We're gonna see. Hold on. That's 200,000.
How much?
Minus 165.
34,800.
Yes, sir. Is that positive or negative?
Negative.
No.
It's
No.
positive.
Oh yeah, it's an asset. So yes.
Remember?
He was looking up here.
Opposite correlation.
I'm looking at the. I'm thinking about the liabilities. That's what.
Opposite correlation, yeah.
Correct.
34, 8,000, you say 800?
Yes, sir.
34, 800 positive. All right. Inventory. Did it go up or down?
Oh.
It went down from 450,000 to 350. Am I not looking at correctly?
Yeah. So it went down by 100,000.
So is that positive or negative?
Positive.
Positive. So decrease in inventory by 100,000. So it's a positive. All right. And then we have prepaid rent. That's an asset. Did it go up or down?
Down.
From 3,000, that means it's a positive, correct? Prepaid rent decrease in
Prepaid for 1,000.
prepaid rent for how much?
1,000.
1,000. Okay. Now, are there anything left? Furniture, fixture, yeah. Okay, now we go to current liabilities. Okay, these are all current assets. Because the next one is fixture. That's a long-term asset. All right, look, liability, accounts payable. Did it go up or down?
It went down.
So that's a decrease. Okay, so we say decrease in accounts payable. By how much?
57,000.
Okay, is that positive or negative?
Negative.
Negative how much? $57,000. Okay, and then income tax payable. Did it go up or down?
Down.
Is that positive or negative?
Negative.
Yes, sir. That's decrease in taxes payable. Tax. Is it tax payable?
We don't separate the assets.
Yes, taxes payable. Tax.
We're not on the sheet, doc. We're
We're not separating the assets from the liabilities.
What are you talking about?
On the sheet.
No, You put all of them in one
Oh, okay.
one shebang.
Okay.
Current assets and current liabilities. Yeah. How much that decrease? We said
And tax payable, $3,000.
3.
Yes, sir.
Okay. All right. That's. Do you see any more current liabilities?
Okay. I'm about to say nose paper. Say long.
No, that's the long term, and the rest of them are. Looks to me they are investing and financing activities, long-term assets and stockholders' equity. So, what is the balance on these? Do we have a positive or negative balance? What is that? You can do it in two ways.
About to find out.
You could do the balance of these, or just say 11,000 plus 46 minus 7 plus 34 plus 100 plus 1000 minus 57 minus 3. You could do it that way, or just find the balance of these and then put that balance under the 11,000.
They're added, right?
Huh?
They're added.
Yeah, whatever the balance is on those. What do you come up with?
Well, I got 115,600 just like without adding 11,000.
115,
600.
600. Is a positive, correct?
Yes, sir.
All right, so let me do this. We don't need this line. I'll leave it just for purpose of explanation. So 11,000 plus 115,000. Add that. And what we call this? Net cash flow from operating activities. Net cash flow from operating activities. 126,600. So let me make this one big because that's the first section. So I'll make it big and bold. So we'll know that this is the first section. Bold. And make it a little bit larger. Oops, too much. We'll do like that. Okay. Now we go to cash flows from investing activities. All right. Cash flows from investing activities. All right, and I'm going to make this one. Let me make these bold, and I'll make this one bold also. All right, now we said this one has to do with, what does it have to do with? Investing activities. Sale and purchase of long-term assets. Yeah.
Long-term assets.
Yes, sir. Long-term assets. So, do we have any explanations, first of all? Yes, we do. So, during 2014, you see that on the next page?
Next page.
Yeah.
Oh, okay. I see. Engaged in these transactions. Okay, I see.
During 2014, the company engaged in this transaction, sold at a gain of 7,000 furniture and fixture that cost 35,600, on which it had accumulated depreciation of 28,800. So they didn't tell us how much it was sold for. We have to figure that out.
Sold at a gain of 7,000.
Yes. So if you go back to, if we say original cost minus accumulated depreciation,
Book value.
give us the book value. Then sale price minus book value equal gain or loss, correct? So number one, let me see if I can do another sheet here. Now how can I go to another sheet?
Go to the top.
File,
Go to new.
new,
Document.
file.
No, you just have to scroll down. You good. I think it's there already, dog.
Oh, it's already there?
Yeah.
Okay. Let's go back.
Let's scroll down.
Where were we? We were here. Okay.
You could, I think you could scroll.
So this one here.
Okay.
Yeah. So we're going to say cost minus accumulated depreciation equal gain or loss, correct? Gain or loss. So the original cost, did they tell us?
Yeah.
Sold fixture, the cost 35,600, correct?
But it had accumulated depreciation of.
So 35,600, that's original cost, minus
The accumulated depreciation.
accumulated depreciation, which is
28,800.
28,800, and that gives us what?
6,800.
6,800. You sure?
Yes, sir.
All right. So this is the book value. All right. So this is the book value. No, I should put. Let me take this back. Sorry for that.
Yeah, that is the book value.
Yeah, that's book value. So the book value is 6,800. Now, okay, sale price. Sale price minus book value
Right. Equals 7,000.
equal gain or loss. Gain or loss. In this case,
We know the book
sale
value,
price minus, we know the book value,
6,800.
6,800 equal
7,000.
7,000, the gain, correct? Positive 7,000. Therefore,
Sale price
sale price
is
is equal to
13,000
7,000 plus
6,800.
6,800.
It's 13,800.
Huh?
It's 13,800.
Equal 13,800?
That's how much.
All right, so now we go back to our original question. All right, so we have sale of furnitures, sale of furnitures,
Yeah, for 13,800, but we're gonna make it
is that positive or negative?
negative since we're dealing
13,800.
since we're dealing with assets. So it'll be a negative.
All right, and then
We put a parenthesis.
purchased furnitures and fixture in the amount of 39,600. That positive or negative?
Purchase, so that's gonna be a positive for us. You purchased it, right? It's assets, so don't we do the opposite?
Well, when you purchase something, when we're looking at cash,
It's an outflow.
yes, that's what I'm saying.
Oh,
It's an outflow. When you purchase, you have to pay for it.
yeah.
Notice when you sold, it was positive. Now when we purchase, it is
Negative.
negative cash flow. Yeah. So, why you look surprised?
Because like these are the assets, right?
Uh-huh.
Yeah, so don't
We're
we
not
like-
talking about assets. We're talking about cash.
Oh, alright.
We're not talking about the furniture. We're talking about cash flows.
Okay, I thought.
Yeah.
Alright.
No, cash flows.
Like we just go opposite with them, like we
Yeah.
did the other ones.
We're looking at cash flows. So purchase of furniture. For how much?
39,600.
Negative 39,600. Is that what you're saying? All right. Okay. Number, that's B. C, paid. That's not investing. D, converted. And E, declared. So those are the only investing activities. Positive 13,800 and negative 39. And that give us what?
Don't find out.
Negative what?
I'm about to find out now. 39,600 minus 13,000.
Negative 25,800.
So the net cash flows from investment activities
Okay, it's gonna be
negative 25,000.
net cash flows from investing activities is going to be
Negative 25,800.
25,800. Notice I put it between two parentheses. That means it is a negative. All right. Now we go to the third section. Let me make this bold. So we recognize the bold one that we need to add. Bold. Oh. Okay. Now we go to the third one, which is cash flow from
Financing.
and that has to do with what? You don't guess. We just mentioned that.
Long-term
Liability.
Liabilities and
stockholders'
equity, yes. Financial activities. All right, so I'll put two brackets there. So let me bold that. All right. So C, go back to the explanation that were given to us, or the activities that were engaged. Paid 20,000 notes payable and borrowed 40,000 on a new note. What does that tell you?
We paid, so we have an outflow of 20,000.
Uh-huh.
Then we have but we got an inflow of 40,000.
Yes, sir. That's correct. So we have a payment of note. Payment of note for how much?
20,000.
That's negative 20,000. And we have a purchase of issuance of a new note. Issuance of note for how much?
40,000.
Is that positive or negative?
Positive.
Positive $40,000. All right. And that's a C. D, converted bonds payable. That's not financing activity. It's not a.
That's non-cash, so that goes up to very
Yeah. So this is a. All right. Converted and then declared. There's nothing. See, when you convert, there is no cash activity. When you convert, that should go into the bottom.
Because you
Yeah.
convert it into shares.
And then the D, declared and paid 6,000 cash dividend. Now, how about this 6,000? Yes, this 6,000 is included. Remember we said if you pay the dividends,
It's outflow. So
it's outflow and financing.
Yeah.
If you're receiving it, then it is
Asset.
operating.
Operating.
Yeah, it's operating. So this cash is paid. So it's going to be financing activity. Is that positive or negative?
Negative.
Paid dividends. How much was it?
6,000. Negative 6,000.
Negative $6,000. All right. So what is the total here? What is the balance?
Positive 14,000.
Okay.
The net cash flows from financial activities.
Positive. How much you said?
14,000.
$14,000. And let me make that a bold one. Bold. So this is a let me yeah, that's fine. What I did usually, let me put this one in the bottom. Okay, we did this one, put this one in the bottom here, and I call it net cash flow. Net cash flows from financing activities, and I pull that up to here, and then so now we have three subsections. We have the 126,000 positive, and then we have a negative 25,800, and we have a positive 14,000. So what is the
cash
net cash flows, overall net cash flows, overall net cash,
net increase in cash,
net all right, let's say net increase in cash is, well, first of all, let's put the balance before we say the increase. If it's positive, that means an increase. If it's negative, it's yeah. So first, net cash flow first from the three of them. Net, the balance, overall balance.
Net cash flows overall balance.
How much?
114,800 positive.
114,800. So 126 minus 25 minus, all right. So it's positive, that means it is increase in cash. Okay, so we still have one more section to add before we check our, first let's check our answer. Okay, look at the cash. It went, by how much went up?
114,800.
You mean that's correct?
Yes, sir.
Our answer is correct?
Yes, sir.
Our work is good. All right, so now we're going to put the last section, and we call it schedule of non-cash activities. Schedule of non-cash activities. And under that we have what? We have conversion of
bonds payable.
Yeah, conversion of bonds into common stock, correct? Conversion of bonds into common. Conversion of. Let me remove this thing here. Into common stock. How much was the total?
$100,000.
$100,000. This is a full statement of cash flows. I think we have explained this upside down and everything. Okay. All right. Now we are through with chapter 15. Now chapter 16. Let me go back to chapter 16. Chapter 16 is the one that we need to do a project, and we need to do presentation. A project and presentation. We're going to do a ratio analysis project.
Of like a company of our choice, or this company?
Yes.
Okay.
So today we're going to determine which companies I need. Do you have an extra sheet of paper? Yeah, if you could write down for me the name of a company that you choose that you're going to do the analysis for. Put Yeah, put no, put title of that. Put principal of accounting two. And then yeah, principal of accounting two. Some beneath it summer 2, 2018. I'm going to put down that on a sheet of paper. Summer 2, and then pick beneath it choice of company by students. Choice of a company by students. All right, and then print your name for me here and choose the company. And the company. Alright. Manny.
And I'm gonna choose Coca-Cola.
I need somebody to go pick it.
Alright.
That's the first company I thought of.
It's because I had a summer job working for Coca-Cola in the factories like
Okay.
ago, so
Okay, good.
it'll be
Just make sure that the company has stocks on public exchange.
Oh, they do.
Yeah. I know they do. Well, you could choose the Pepsi.
I'm doing
maybe.
Walmart.
Okay, Walmart. That's
That's a
fine.
good one.
Yeah, those Mr. Jimenez and Mr. Walsh. If you can hear me, you need to pick a company that has stocks on a public exchange, and that's the company that you will do the ratio analysis for, and that is your project going to be.
Just like a lot of car companies, a lot of cars you drive in.
Can I do my like on a big sports company? Like I like
brands,
War
but
Wrestling
you,
Entertainment.
they really be
The War Wrestling WWE War Wrestling Entertainment.
Well, pick a company that deals with that,
Okay, that's good.
but make sure they have stocks on the stock exchange.
Can I look it up real quick?
Yeah, look it up and.
You better
No, I ain't gonna do Brooks. I'm gonna do what I like. Wrestling, goddamn.
Okay, here is the deal. Here is the deal. I'm going to do a template. Okay, so let me do the template today, and then we will see what we're gonna do. So let me go to PowerPoint. Let me go to PowerPoint. That is for chapter 16. All right, PowerPoint 2013. All right. So number one, you're going to put the name of the company. The first slide. Okay, you're going to put. Which one did you choose?
I'm dead serious.
World Wrestling they have stocks.
Yep, I'm looking at it right here.
All right, good.
WWE.
So the first slide is going to put the name of the company. So let's say Coca-Cola. Cola. What's the original name? Coca-Cola Enterprises or Incorporated? Okay, make sure you get the correct one. And then on the subtitle, you're gonna do you're gonna put down ratio. Okay, R, and before you do that, on the let's go back to here for a second and put principles of accounting 2, principles of accounting 2, summer 2 2018, summer 2 2018. All right, summer 2 2018. Okay, ratio analysis project. Ratio analysis project. Okay, ratio analysis project, and then here you're going to put the name of your company in the subtitle: Coca-Cola Incorporated.
Yes, sir.
INC, sorry. And this one is, of course, you're going to put the colors that you want, and you're going to put maybe their logo, the company logo on your slide. And okay, so that's bold. And it's up to you to put the title that you want. Okay, Coca-Cola. All right, and then we go to a new slide, and on the new slide we need same thing, I think, title. The new slide, you're going to say introduction. Introduction, and then you're going to write down your introduction, all right?
Just explain about the company,
Yeah.
what it produces.
Yes. Give an idea about the company and why you chose it.
I go back to the first guy.
A very brief description. Very brief.
Could a picture be added to, or just a description?
Huh?
Could a picture be added, or just a description?
A brief? What?
Can I add a picture, or it just gotta be?
No, it got to be the description.
Just description.
You could add, if you put on your slide.
You know
make
what?
it
You know what? That Coca-Cola's name is drink. The name of the company is the Coca-Cola Company.
company.
The
Okay, we come back to it in a minute.
Yeah, the Coca-Cola.
Very brief
It used to be some Coke.
description
The original Coke.
and just one paragraph.
One paragraph.
Okay, just one paragraph. Oops. Description, and why did you choose it? Why did you
It is
choose it? Why did you choose it? Okay. All right, the next slide. Do you have a copy of your syllabus? New slide.
Yeah, it was right here.
Okay, let me see that for a second.
Hold on, he goes to the first slide again.
Hey, okay. Hey, you have a very good description. So, you're going to elaborate on liquidity.
So this the outline of the project right here?
Huh? Yes.
Alright.
Okay.
I
So,
don't think I got a syllabus for
you did not get one?
no sir.
Okay, let me see. I may have an extra one for you. Here. Oh, you can have this one.
Thank you.
You're welcome. And you got one already.
Yes, sir.
So we're going to, number one, start with liquidity. Okay, liquidity. And then you can define liquidity. Define. And then you're going to use a current ratio. Current ratio. Okay, you got to write the formula. Equal current assets over current liabilities. Current ratio. And you're going to say return, quick ratio. Quick ratio. Also, you're going to list it, the formula. And then you're going to do, that's enough. Those two is enough.
Okay.
Yeah, those two is enough. And then, once you find them, okay, make a comment. Make
Comment gonna be
a comment
down.
on liquidity.
Everything went down except for the assets went up.
Okay, make a comment on
$80 with the assets.
liquidity.
You said 80 good?
Okay, and then new slide. Same thing. The next thing you know, elaborate on profitability. Profitability. So let me do the center. Profitability. Okay, and then number one, define, and then you're going to do profit margin ratio, and then you're going to do return on assets ratio, and then you're going to do return on equity ratio, okay. You need to define each ratio, okay, not just profitability. Define, okay, define and ratio, define and ratio, define and you do the formula, define, you do formula. You're going to plug in real figures, okay, and then make a comment on profitability.
So you say we got to define each one of those, or define profitability?
Define profitability and each one of those.
Okay.
Each one, very brief, 2 sentences, maybe 1 sentence, 1 line.
For each of them?
Yeah, and then you put the formula and plug in the. We're going to do that, okay? We're going to starting Wednesday, tomorrow, by the grace of God, we're going to go through those one by one, okay? So, comment on, once you do the ratio, then you should have an idea how the profitability looks like. Yeah. So you comment on profitability, okay? And then we're going to add and go to another slide, new slide, same thing. And next we're going to elaborate on long-term solvency. Okay, so the title is going to be center long-term solvency. Long-term solvency. When it's solvency. That's the ability to survive for a long time.
Well,
So define.
My company is too big to fail.
Okay. Define, number one. Define long-term, and then elaborate on 2 ratios: debt to equity ratio. Debt to equity ratio. Okay, you define and the formula. Define and the formula. Debt to equity ratio and interest coverage ratio. Interest coverage ratio. All right. And then once you define long-term solvency, define each ratio and put the formula and get the figure. Then you make a comment on long-term solvency. Okay,
My comment kind of just put my company is too big to fail. So
I mean, you got to do it. You got to do it based on the figures. Say the figures look so and so, therefore, like that. And how your conclusion needs to be.
my company is also too big to fail, so none of that matters. I swear.
Huh?
I said, but my company is also too big to fail, so whatever trouble I get in, the government will get me out.
No, it's you got to do it based on the numbers. Yeah, strictly based on the numbers. Yeah. Okay, then we need another slide, and this slide is about market strength. Okay, market strength. Okay, then you're gonna define market strength. Define Number one. And number two, you put the ratio. In this price earning ratio. Price earning ratio. Okay, price earning ratio. And you define the ratio. You do it, plug it in, and do the numbers, and then comment. Okay, and then one last slide.
I do this. I'm sending all my work to Walmart. Tell them hire me.
And your last slide is a conclusion. Okay?
You said this is Coca-Cola, and this is my resume becoming our next CEO. Next thing,
Conclusion.
I'm mixed up.
So, you just give us, based on what you have seen, and of those ratios, make a maybe a paragraph to 2 paragraphs conclusion.
About why I should invest in a company and stuff like that, right?
Yeah, I mean, the figures, maybe give some financial highlights of the company, yeah.
Or we could, so basically like say the highs and the lows and stuff.
Yes,
Okay.
and then see what is the in the conclusion. What is the current market value per share? You get that from online. And do you recommend investing in this company and why? That's the bottom line. Yeah. Okay. So, and this is particularly to Mr. Walsh and Mr. Jimenez. Mr. Jimenez. That's for both of you. You need to do this presentation. Listen to that. And you need to do it on a small video and email me the video. You need to do it on a video and email that video to me. All right, and then you have to be in a business attire. Please read the syllabus and read that section about the project, and it has a lot of details. And so this is the template for presentation. It's only 7 slides. It's not that 6 or 7 slides. Yeah. Yeah. It's not too bad. It's very easy and has to be presented. And there is a judgment. And I will tomorrow, by the grace of God, I will give you the grading sheet. How you will be graded on it. Yeah. The rubric. Yes, sir. I will give you the that's the word I was looking for. Yeah, I will give you the rubric. All right. And then tomorrow, by the grace of God, we're going through all of these ratios, this analysis. So you will have. I recommend that you go and get the financial statements before, if you could get it today, so you can do your figures at the same time. So that makes it be a lot easier on you.
Financial statements like the income statement.
Yes. Let me show you how to do that. Okay, let me show you how to do that. Okay, and so let's go to the internet. And let's say Coca-Cola, for example. Okay, Coca-Cola. I go to annual report. Annual report.
2017 and 2018.
Let's say if they have one 2018, that'd be really good. But 2017, because probably
2018 is already halfway over, so they should have like a 6-month semi-annual.
Let's do 2017. 2017 is good. So I'll take 2017. Okay, Coca-Cola, HBC annual. Okay, annual report. Let me click on that.
You should have went to the one with the company.
I need the one with PDF. Is better.
Look at that. I'm gonna print all that out tonight.
2017 enterprise. Let me go back for a second. Do you see one with PDF?
Go down.
2018 annual report.
You go to the top and put PDF.
Here's PDF.
That's
annual report.
Go down. Oh, no.
Annual report, Coco. Or
Go
what
to the
you?
second one. Yeah, click
Huh?
on that. It'll probably have like
Yeah, that's
something.
what I said.
It probably like the second one.
This
That's
one?
That's the actual company
That's the
website.
actual company website, so it probably have like a link to the review. Like
This one?
No, the second
No,
one.
the second one. The second one.
This one?
Yes, sir. Right there. Click on it.
Okay.
Go down.
It's not.
It won't let you scroll down.
Oh look, press the little arrow right there.
This one?
Yes, sir.
Yeah, you're right. We are.
Oh look, you got you some highlights.
17 highlights. We need the annual report because I need a copy of those. I need the copy.
Keep going over. My boy Morgan Freeman.
That was Morgan Freeman. Oh.
Why don't we? Do they have
They probably keep going over.
a research? Do you have the research? If they have a research, company reports, look at this one. Company reports. Okay, company reports.
Yeah, there
Oh
you go,
look,
right there.
right there.
Download 2017.
Yes.
PDF.
Okay. Now there is a section, financial statement section. Now how can we make this larger?
Oh, there you go, right there.
No, because there's a page.
Pie charts and bar graphs.
We need the section.
Right there.
No, that's selected financial data. We need, I'll show you what we talk about. Just 1 second.
The financial measures.
And how come?
I'm gonna download. What about that?
That's not it.
What? Hey, that look like some good amount of information right there.
Okay,
What you
that's
mean,
not
like, are you
it.
looking for like a balance sheet or something?
Yes, income statement and balance sheet. That's what I'm looking for.
It probably had right there. Well, go
The-
ahead, look it up then, like Coca-Cola income statement.
Nah, nah.
balance sheet.
See, that's not only 24. That's probably Cola Company, Beverage for Life.
Nah, those are other companies that the Coca-Cola company, those are the subordinates. Like, you know what I'm saying? Like the other companies that they branch off and own.
Uh-huh.
So, it's like when Nike got like
Okay.
what had
Select
Jordan,
PDF file.
they had Kobe, Audemars, it's all right.
Company reports. Download annual. Okay. This one. Let's see. Okay, is that it supposed to be?
That's what we were just looking at.
Huh?
That's what we were just looking at.
That's not it. Financial measures. Something wrong here. Company reports. Financial, okay. Online, sustainability.
It says financial reports in 10 through K. To the right?
This one.
Yeah.
Okay. 10K. 10K is the best one. Let's see. If we find 10K, we're good.
We got the stock information.
Okay. Okay.
It's located in the 10K.
Y'all up?
Go up.
Y'all up now?
Right there. That little,
Oh look, annual reports.
This one, quarterly report. Okay. Your report. 20. Oh, okay. Click here to order printed copy of the most recent 10K. I don't want to order. Let me see this one. All right. I think we got it now. Yeah. We got it. So if you go down, which page? Let me see if we can. Well, we can. Let me make it larger. 100. Okay. Percent. Financial statements and supplemental item 8. So we need item 8.
All the way to the right, it'll show you the page. To the right.
To the right. To the right.
Like if you scroll there, go there. Alright.
Okay.
Yeah, it'll show you the page number on the right, like in the
We need item 8. Part one. Come on now. Let me do this until we see selected financial data. Because there is one section only has in it financial statements. It starts with current asset for your own good. That's why it's going to be easy on you to do. So you will have very nice subtitle, current assets and current liability like that. So you don't have to worry too much about trying to figure it out.
Oh, go up.
No, we haven't got to it yet. Okay, do you see here? Maybe if we push on it here without looking. Stockholders, financial data, quantitative. See, financial data. Financial statements. Yeah, okay. Consolidated statement of income. Here, see? That's the one. This is an income statement.
December 31st, 2007.
Yeah, this is an income statement.
That's really like compared to the balance sheet. If you think about it, because they had.
Here is your balance sheet.
Okay.
See, that's why I'm telling you need that, because you have your total, for example, current ratio. Total current assets for 2017 is this, and you divide it by your total current liabilities and give you your current ratio.
I'm gonna go home and
then your quick ratio,
I'm gonna print out all that at the crib.
and then your quick ratio is going to be your total current assets minus your inventories divided by total current liabilities. Yeah. So print, if you could print yours before you come to class tomorrow, you are in a good shape. So you can do actually going to get your figures tomorrow.
So we got to print out the financial statement.
Okay? You're going to get your figures tomorrow.
I knew Coca-Cola had all that stuff.
All right.
So I wasn't tripping on that.
I strongly suggest you to get it to you, bring it with you, the income statement and the balance sheet. Bring them with you, and then you would do it on the spot, your project. You do your project, you put it together as we go along, all right? Now I'm going to help you getting it together as we go along.
So when we do our presentation, we gotta come in business attire as well?
Yes, sir.
Okay.
Yeah.
Just making sure.
We didn't do the business.
Okay, let me stop here.
So I work tomorrow.
Sorry, it's a requirement.
When we present the yeah, you know.
We do our project. Yeah, I gotta work tomorrow.
Stop streaming.
One of the days I work, I come to